Welcome to Crowded Market Report by Jason Shapiro.
Hi, today's Saturday, March 2nd, 2024, and I'm Jason Shapiro with crowdedmarketreport.com. Today I'm going to rant a little bit because I'm a little bit pissed off about some of the things I've seen out there. I am relatively new to this idea of offering investment advice to people. I've been a money manager for institutional investors for, over 25 years, about 25 years now. And this whole thing of, having newsletter and all that is pretty new to me. And what I've seen, part of it is, look, if you want to get my newsletter and all that, great. And if you don't, that's great too. But part of what I am trying to do as well is get people to avoid falling for the bullshit shills that are out there. And there's a couple kinds I see. One is and I'm not going to go with names here because you can figure it out for yourselves because you're out there listening to these people. But, there's the guy who called the 2008 crash, and that's great. And that makes him some kind of guru because he called the 2008 crash. But the truth is, if you call a crash every fucking day, every month, and every year for 20 years, and you catch one, that doesn't make you a guru, okay? In particular, if you continue to call it. There are these people that say, oh, they called the 2008 crash. Great. But they've been calling that since before 2008 and since 2008. What has that gotten you? It's crap. I've said it a million times. I flip a coin, I call heads, it becomes heads. That doesn't make me a guru. Now, if you called the 2008 crash and then in 2009 said buy the shit out of everything and have essentially been riding that up since, God bless you. But that's not what these guys do. All they do is talk about the 2008 crash, how they called it, and now they're calling it again because they're selling you bear porn. All right? It's been proven. Bear porn sells. It scares you. Fear sells. I did some videos a few months ago where I took the same data and made a hugely bearish argument with that data. And then I made a bullish argument with that data. And the bearish one video got 5 or 6 times more views than the bullish one. Same data, different conclusion. People love bear porn. Don't fall for it. All right? Hey, I called the 2008 crash and I'm telling you that we're in an even worse situation now. It's bear porn and it's bullshit, and don't fall for it, okay? That's one type of bullcrap that pisses me off. The other type of bullcrap are the guys who are the marketers. They have these great videos that they put out every day or every week or every whatever, their morning calls or afternoon calls, and they have these charts and all this crap, and it's all crap, these trend lines and all this. It's bullshit, okay? That stuff is random, man. I am telling you, that's not what moves markets. What moves markets, as I've said a million times and proved a million times, is positioning. It's money in and money out. That's what position is. Money goes in, markets move up. Money comes out, markets move down. That's what moves markets. Positioning is what can help you decide that. And that's what I always talk about. But the point is all this other stuff with the bells and whistles and the names and it sucks you in. It's a sales pitch, and these people are shills, okay? And one of the shills that I've seen that pisses me off is these people that come out and say, oh, 90% of our trades are winners. They're not, okay? They're not. It's bullcrap. And you listen to any of the great traders over time, Soros, Druckenmiller, Kovner, Paul Tudor Jones, they will tell you straight up that much less than 50% of their trades make money because they're getting into risk-reward situations. And when they make big, and when they lose small. These people that are telling you that 90% of their trades make money, that's the first warning sign. It's bullcrap. And here's how you make 90% of your trades make money. First of all, you're paper trading. That's the first way you do it. And you buy something at 10. Then you buy more at 8. Then you buy more at 6. Then you buy more at 4. Then you buy more at 2. And then it goes from 2 to 1, and then it goes from 1 to 5, and you get back to even, and you get out. It's called Martingaling, and it works on paper, but it doesn't work in real life because there's not enough money to stay around for the things that go against you massively. You sell NVIDIA at 150, 200, 250, 300, 350, all the way up. You sell Bitcoin at 15,000, 20,000, 25,000, 30,000, 35,000, 40,000, all the way up. Then sure, eventually you've pyramided in, you've martingaled in, and it has a pullback, and you get even and you get out. But that's not real money. You can't do that with real money because you would have blown out by that point. It's paper trading, and it's a shill. And these people do it, and they're stealing money from people. And like I say, sign up for my service. Don't sign up for my service. Your call, man. But don't fall for these people. They're scammers. They're getting rich off the back of you. They're getting rich off the back of your fear. They're getting rich off the back of your lack of knowledge about how markets really work by showing you these impressive looking charts and trend lines and indicators, and it's all crap. And what you'll never hear from me, this is what I notice with these other people too. You'll never hear from me some idea that I just stick to again and again and again and again and just keep saying it and saying it, whether it be a macro idea, whether it be a trading idea. Just as one example, I had a cocoa trade last July where I want my data that I use was telling me to get short. Cocoa was around, I don't know, 3,500 or something like that back then. But, you know, and the trade lost money, got stopped out, took a small loss. And then the data switched and it said it's no longer a short. So I switched. I'm not just going to keep shorting cocoa. Cocoa has now gone up to 6,000 in that time period. You would have been blown out. Data switched. I switched, and I no longer shorted it the whole way. Just because I was shorting at 3,500 doesn't mean I should short it at 4,000, 45, 5,000, just to prove that I'm right, okay? Because it's not right. It's wrong. A, the data shifted, and B, that's just the wrong way to go about this stuff. You will never, and I can make these bearish arguments just like anybody else can. I can make, and I've done it. You can see my videos. I can make huge bearish arguments about the system being a Ponzi scheme and it all going to come to an end and blah, 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 blah. But I'm never going to trade off of that. I'm not going to keep putting on shorts just because of this one idea. Even if it were a bullish idea, I'm not going to just keep putting on longs just for that one idea. That's not what a trader does. That's what a scammer does. A trader doesn't do that. A trader adjusts. A trader doesn't tell the market what it's going to do. A trader lets the market tell them what to do. The market is much bigger than you and much bigger than your ability to think, and clearly much bigger than your ability to predict the future. And this is what these people won't tell you. They want you to believe that there's some kind of guru that's going to tell you, and all they do is lose people money. And you got to get sick of it, and you got to not fall for it. Please. Again, you don't have to sign up for my thing, but stop spending your money on these people who are bullshitting you. Pisses me off. So anyway, that's my message for today. I hope everybody had a good week trading. I hope everybody has another good week trading next week. And if you'd like, check us out on crowdedmarketreport.com. Please like the video if you could, if you liked it. And we will talk again next week. Thank you.
Subscribe to Crowded Market Report by Jason Shapiro.